Hey guys, welcome to your quick market update. Today is Friday, August 28th. Yes, we're almost to September, if you can believe that. Rates were the story again this week, and it all came to a head today in Jackson Hole. And here's what moved the market. Fed Chair Kevin Warsh gave his first major speech as chair at the Kansas City Fed's Jackson Hole Symposium this morning. He didn't commit to a rate move, and he stuck to his refusal to give the market forward guidance. But he made clear he's still worried about inflation, saying the underlying trends haven't meaningfully improved, even though recent readings came in a little bit better than expected. That was enough to push short-term Treasury yields higher, with the 2-year jumping over 6 basis points, while the long-term end actually eased slightly. The comments lands on top of a Fed that's already split. At the July meeting, we talked about this before. 3 regional presidents, Beth, Neil, and Lori, all dissented in favor of raising rates right now to get ahead of inflation. Markets currently see roughly a coin flip chance of a hike at the September meeting. So here's the tension, though, worth flagging. Raising rates doesn't touch the things actually driving the cost of living. Energy and gas prices are set by global supply and demand, not the Fed's rate. What a hike does do is raise the cost of every variable rate loan, credit cards, mortgages. Consumers are already stretched thin. So the tool being debated to fight the cost of living, the problem is it mostly raises borrowers' costs, not fuel cost. And there's a second storyline that got buried under the Warsh headlines. The BLS, Bureau of Labor Statistics, also dropped its annual benchmark revision this morning, timed right alongside the speech, and it wasn't pretty. Non-farm payrolls through March came in 79,000 lower than previously reported, with the private sector job growth revised down a steeper 178,000 jobs. That confirms what the more reliable QCEW, that's the quarterly census of employment and wages, state level data had been signaling for months. The labor market has been running noticeably cooler than the monthly headline suggested. It's a smaller miss than last year's record 911,000 downward revision, but it's still a downgrade, and it lands right as the Feds debate whether the economy can handle higher rates. And that sets us up for next week, guys, perfectly. It's jobs week. Waiting for that BLS on Friday. The August employment report drops Friday, and after today's downward revision, traders are going to be parsing every number for signs of whether the labor market is actually cracking or just cooling. That report will go a long way towards deciding whether the Fed hikes, holds, or even cuts at the September meeting coming up on the 15th and the 16th. Here's the bottom line, guys. The Fed is fighting a two-front battle. Sticky inflation on one side and a softening jobs market picture on the other, with a bond market watching every word in between. It's a big week ahead. That's the update. Guys, have a great weekend. I appreciate you watching. Talk to you soon.